Mr. B is a sales manager in PQR Limited during financial year 2025-26, previous year. Okay, he has received the following towards his salary and allowances and or perquisites. Okay, perquisites or perks, benefits attached to a job or perquisites. Basic pay 85,000 rupees per month up to December for 9 up to December no, for 9 months 85,000, and thereafter for the next 3 months 2,000 rupees increment, which is 87,000 rupees. Dearness allowance 40% of the basic pay. Okay, whatever we calculate 85,000 in 9 months, 87,000 into 3 months, put together we will get some amount, and multiply by 40% is dearness allowance, which is forming part of retirement benefits, which means when we calculate salary we are adding this. Bonus 1 month basic pay based on the salary drawn on during January month every year, which is 87,000 rupees, not 85, because Jan, Feb, March they have increased the salary by 2,000 rupees per month. He contributes 14% of his basic pay and DA. So whatever we get to have a number after adding both basic pay and dearness allowance, if you calculate 14% of the arrived total, that is the contribution done by the employer, is recognized provident fund, and his employer company contributes the same amount. Both are contributing the same amount. Okay, we can do that. Traveling allowance 5,000 per month towards on duty tours. Duty tours no official tour completely exempted. Okay. Entertainment allowance 3,000 rupees per month. In case of only for the government employee, entertainment allowance, since it is PQR Limited, it is fully taxable, both OTR, DTR. Children education allowance only in OTR, for that too for 2 children. If the first baby happen to be twins, then second baby is not, the third baby is not applicable or eligible for children education allowance. If the first baby is okay, for a single child, but the second baby happen to be twins, all the 3 children are allowed for 100 rupees per month, which is 1,200 rupees per year allowance that they can exempt. They can claim exempt in the amount that they receive as a allowance. Accommodation owned by PQR Limited, okay, was provided to him in Hyderabad for the whole year, and the furniture cost 2 lakhs was provided from 1st October 2025. 1st October, November, December, the third quarter till the fourth quarter, which is 6 months on the they are giving furniture. We need to calculate furniture for this one. Okay. Reimbursement of medical expenses on his treatment in private hospital 15,000 rupees. Medical bills reimbursed, fully taxable. Medical allowances 1,500 per month. Allowances also he might use, he might not use, so multiply by 12, 18,000 rupees, fully taxable. But company has paid premium on medical policy purchased. Health insurance premium or medical insurance premium paid by the employer for the employee 12,500 rupees is exempted. Now, what is the requirement? You are required to compute the income chargeable to tax. What is chargeable to tax? We have furnished multiple components of his salary. Now we need to calculate what is chargeable to tax. Income chargeable to tax under the head income from salary. And both the regimes, optional tax regime and default tax regime. Let's start. Components. OTR and DTR. What is the basic pay? Like we discussed before, 85,000 rupees up to December, only for the 3 quarters. 3 quarters, that is starting from March, April, May, June, first quarter. April, May, June is the first quarter. July, August, September is the second quarter. And October, November, December, till December it is the third quarter, which is 3 quarters, 9 months, 85,000 rupees per month, and from there on, Jan, Feb, March, 87,000 rupees for the next quarter. Okay, that is what the basic we should calculate. So 85,000 rupees into 9, 87,000 rupees into 3, 10,26,000, 10,26,000 in OTR and DTR, both are same. Basic pay calculation will not differ based on the tax regimes that we choose. What about DA forming? DA forming is 40% of basic pay. If you calculate 40% of 10,26,000, which is obviously 4,10,400. When I wrote, I did mistake. It is not 4,10,000. It is 4,10,400. Now I have corrected, but it will take some time to get it reflected. Alright, so the bonus amount is 87,000 rupees. How did they get to the 87,000 rupees? Because they have given. Sorry, I had to interrupt because I had a call, so I spent about some few fraction of seconds and came back to that video. I might try to trim this portion, but still trimming it will take some time. I will straight away upload it. Please bear with me. I think nobody is going to see the video just for the sake of me getting engaged with the material. I'm teaching this, but still, if anyone listen to this or watching this video, please excuse me. So, but bonus 1 month basic pay based on the salary drawn during Jan month every year. Jan month is 87,000 rupees. So 87,000 rupees they have clearly mentioned. Now 14% of basic pay and DA towards recognized provident fund by the employee, and the same also been contributed by the employer as well. Right? So what is note 1? How do we get to 28,728? First we have to calculate salary, employer contribution towards RPF salary. What is salary? Basic pay plus DA forming plus any sales commission. What is 10,27,000 is a basic, and 4,10,400 here have written it correctly, and commission is 0, so 14,36,400 is a salary. Out of 12% out of which can be exempted, and for that we need to know what is the employer contribution. 14% employer contribution towards PF is 2,01,096. How did we get this? 14% of that 10,26,000 plus 4,10,400. If you put together, you will get a number out of 14% out of which is 2,01,096 rupees, and out of which 12% of the salary, 14,36,400. 12% of this is 1,72,368, and if you deduct 2,01,096, 1,72,368. If you deduct 1,72,368 from 2,01,096, which is 28,728, is the only taxable amount on the employer contribution towards PF. Note number 1 is closed. So this is what you need to remember when you are calculating employer contribution towards recognition. The taxable value of employer contribution towards recognized provident fund. You have to calculate first salary. Salary is basic, DA forming, any sales commission, right? Not any sales commission, sales commission, and employer contribution. That could be given in terms of 14% of basic pay and dearness allowance, something like that. Then you will have to deduct. The 12% of, because up to 12% of the salary is deducted, right? So you have to deduct that amount, and finally you will get to a number that is what a taxable value of employer contribution towards provident fund. Note number 1 is now done. Moving on, traveling allowance, official tours, because he is not spending for private purposes, is completely exempted. He doesn't have to pay tax on it. And what is this 36,000? Entertainment allowance, they are paying 3,000 rupees every month. Because the company he is employed is a private company, only for the government employees, the entertainment allowance is maximum of 5,000, or actual entertainment allowance allowed, or 20% of basic salary, whichever is less is exempted from tax. In terms of, since it is a private company, 3,000 rupees multiplied by 12 months, which is 36,000 rupees taxable both in the case of OTR and DTR. Done. Education allowance, he can claim for the first 2 child 100 rupees per month, which is 2,200 rupees per year for a child. In case of 2 child, 2,400 rupees. But he is receiving 600 rupees per month for 3 child, which is 7,200 per child and 21,600 for who? All the three child. So in case of DTR, it is completely taxable. But since you have, in case of OTR, 2,400 has to be deducted. So 19,200 is what? Taxable. And rent-free accommodation. This is something finally very important. Rent-free accommodation. For rent-free accommodation, we should calculate salary. And after calculation of the salary, what will you choose? Is it owned by the employer or leased by the employer? If it is owned by the employer, based on the population. If it is leased by the employer, 10% of salary, whichever is less. That calculation will be there. Okay. So this is for children education elements. Right? RFA in terms of OTR. For RFA calculation, salary items, you need to please always remember. Please always keep in mind that salary calculation in terms of RFA, R means 6 items. Right? 10,26,000 basic pay, 4,10,400 DA farming, 87,000 rupees bonus, 36,000 rupees Saturday allowance, 19,200 education allowance, 18,000 rupees telephone. Not telephone bill. What is this 18,000? 18,000, 1,500 rupees medical allowance. So which is 12,000, 12 months, 18,000 rupees. So put together, how much it comes to? Put together, 15,96,000 is the salary. House owned by the employer, population of the Hyderabad is more than 40 lakhs, which is up to 10% we need to calculate. 10% of the salary is taxable as 15, yes, 1,59,660 is a 10% of salary. And he is also provided with the furniture, which is 2 lakhs worth of furniture, 10%, but we are calculating only for 6 months because he was given only starting from October. So which is around 10,000 rupees, put together 1,69,660. But in case of DTR, except the education allowance, everything remains the same. So we need to add 2,400 to the total. Now the total becomes what? Instead of 169.60. No, in terms of salary, instead of 19,200, we'll put 21,600. Now the salary becomes 15,99,000. Now the 10% of 15,99,000 is 1,15,900. But the furniture taxable amount is actually 10,000 only. So 1,69,900 in terms of DTR. So we'll put everything there. Where? Here. 1,69,660 for OTR, 1,69,900 for DTR. Medical expenses, 15,000 rupees, reimbursed, fully taxable. Medical allowance, fully taxable. But medical insurance premium is tax-free. So gross salary, this is what you will get. Standard deduction for OTR, 50,000, DTR, 75,000. Income from salary is the final amount. We'll see you in the next video.